Good morning, everybody. It's Tuesday, June 1st. It's 8:30 in the morning. I just want to quickly run through the charts of gold, the S&P, the dollar, and the oil. Okay, so here we have the Kitco overlay chart. More or less, we saw the past few days this has been a resistance, resistance level. Then it became a support level, and now prices have rallied up. We saw yesterday gold found the 1220, which is a whole number. Which means it's an even number like 1220, 1230. They always act as support and resistance levels. It carried through this morning, pretty much held down, and now it's found support there, and now it's bouncing up, and it's starting to rocket up here. And so right now, I think we're going to see most of the move this morning, and probably till about 10 o'clock, and then it'll probably just flatline, if not drift somewhat back down. It could even come back down to the 1220 area, and just as people take profits, and it just drifts down. I would figure though it'll drift up through the night, which gold usually does. It usually drifts up in the night and usually comes down sometime in the morning. But that's what I see there. Quickly pull up the trading charts here. This is the 60-minute chart of gold. We can see that we've had a nice run up. We got in down here. We took some money off right up here at the 1210 area, 1213. I wanted more of a pullback down into this level here. Unfortunately, we just got a tiny little dip, and now it's starting to go back up. This is one of the reasons why I say we only take partial positions off, because we want to lock in gains in case it does just end up starting a new leg down. We take some money off the table. If it comes back down and we get a nice low risk setup, we add that balance of position back and we catch it for a higher move. But the whole reason we take some money off the table here is to make sure we do take some profits after a nice run in case it does go down, and we keep a balance in case it just keeps going up. So right now what we've seen is this nice run up. We've got this nice bull flag, and now we're starting to see prices move back up, which looks as though it could technically go to the 1250 area without too much trouble. I know a bunch of you aren't in the trade right now, but I think jumping in right now and chasing isn't the best play. There is going to be quite a bit of resistance in this whole area across here. So, unfortunately, getting out here all of the position at once, it's a good learning experience for sure. You did make some good money on it. Next time, for those who sold out, make sure you always hold a core position, because this is what the strategy is based on. You're taking money off the table and to lock in profits, and if it keeps going, you're still in the party. So that's what I see with that. If we look at the daily chart, gold looks very bullish. Let me just zoom in a bit here. Pretty much we had a run up, we got this pullback, and now it's going back up again. It's going to probably test right through these highs. It could test the very high, could form a double top. Who knows? We'll play it by ear. By the time we get there, everything will change. We'll see different volume patterns. But right now, it's pretty much had this flag, and it just popped this morning, and it's moving up. So we're probably going to see resistance. The 1240 will be probably a pretty key resistance level. That's what I see for gold. Now let me just pull up the S&P. Here we've got you can see we've got the cycles are bottoming out. So last time they bottomed out, we saw this nice rally up. Now there's a little bit of confusion, not confusion, but there's a lot of different things going on with the market right now, making it very difficult to figure out what it's doing. And we could actually see one more dip lower, and it could be a 5 wave, and 1, 2, 3, 4, 5, the 5th wave, and we could have 5 wave down and then a nice move up. Or it could bottom here, which I think it is bottoming here, and we could see it start a new rally. But it's very tough to call. There's a lot going on. There's huge distribution in the past month. It's equivalent to what we saw in February, March of 09 at the bottom of the market when everybody was panicking out. So the fact that everybody's kind of panicking out here really makes me think that this is a pretty major pullback, and it could lead to another year of rallying prices. But again, we're just going to play it by ear and start to catch these moves once they go. Right now we're seeing the market has sold down quite a bit from the Friday. and it's going to open down a couple percent. Um, I would think today could be a possible little bottom here, where it's falling right into a support level. If we just zoom in here, just through this noise, we've got all this price action above, below, and now it's back on top. So it's forming a nice bottom here. Could be um, a mini head and shoulders here forming, depending how it goes. We're just going to have to play that by ear. But let me just zoom into the 60-minute chart. Okay, I'm having some problems here. Here we go. Okay, so we've seen it sell down through the weekend, and this morning it's right through this heart of this key support level in here. We do have two cycles bottoming out, so there's a good chance we're going to get a nice bounce today. I'll quickly run through the market internals. We have got the put call ratio. This is a total put call ratio for stocks and indexes. We have got, anytime it's hits this green line, usually it's the market is bottoming, and usually the day or 2 days after we see the markets bounce. Yesterday it closed up here above on Friday closed above the 1 point, so the market is oversold. Everybody's very bearish on the market. If everybody's bearish on the market and selling puts, it means there's a good chance it's going to bounce because there's only buyers left. So we're looking for upward bias today on the put call ratio chart. If we look at the NYSE advanced decline line, anytime there are a large amount of stocks selling down below say there's 2,000 stocks down. It's not anywhere near that right now, but it is down in the lower end of the range, so it will naturally try and pull back up. So this chart is pointing to we could see some buying today. Of course, with the market gapping lower, we're going to see this drop intraday. It'll probably be down somewhere in this area, so there's going to be a good tendency for a bounce today, I would think. If we look at the VIX, this is a pattern I pointed out a while ago, showing that we had the spike in volatility on the natural breakdown, and we had the continued slide, and now it's back down into this support level, and we're most likely going to see another jump up, probably through the top of this noise. And maybe this is what we see today, is this jump up to about the 40, and then we could get a neckline breakdown. And as this drops, the market will rally. So I think volatility is starting to bottom out here, which is what we want to see. And so really overall, I think today's gap lower could be a good buying opportunity for those who want to get in and play it. We might take a position. We'll see what happens. There could be big follow through selling, so it's kind of iffy right now. The market is moving a lot. It's moving 2, 3, 4% very quickly. It's a little more volatile than what we would want, but we're going to I'll talk about it in the chat room. Anyways, that's what I see for that. As for the US dollar, we've seen the US dollar 60-minute chart goes back a few days. It's formed a very large bull flag here. It's testing the highs. If it breaks out here, we're going to see the US dollar surge and probably continue on with a very nice big rally. Money is moving into the US dollar. It is also moving into gold, meaning that everybody thinks the US is more secure than every other country, and that's where the money is going for safety. It's also going into gold because it's just a natural safe haven. If we just look at the recent price action, you can see there's a cursor on both charts moving. US dollar spiked up over here, and as it spiked up, we saw the oil tank this morning. They're trading in reverse, so we're seeing weakness in oil, which is expected if the dollar moved up. That's about it for this morning. I'm looking obviously for a bullish bias this morning, and we'll go from there. Talk to you later. Bye bye.